Hello and welcome to Treasury Notes, a financial education program from the West Virginia State Treasurer's Office. I'm your host, Gina Joins. The West Virginia State Treasurer's Office oversees the state's short-term investment pools. Treasurer Riley Moore serves as chairman of the West Virginia Board of Treasury Investments, also known as the BTI. The treasurer works closely with BTI staff and advisors and consultants who help provide portfolio management and reviews. External advisors and consultants have helped the BTI's portfolio grow to more than $8 billion in assets. These experts also help guide the conversation of investment strategies. Sterling Capital is one of the board's advisor companies. Today we're going to talk about how Sterling Capital works with BTI staff and plays a role in short-term investment strategies. Joining me now to talk more about this is Pete Brown with Sterling Capital. Pete, thanks so much for joining me here today.
Thank you, Gina. Great to be here.
Yeah, well, we're glad to have you. And let's just start with some very basic information. Sterling Capital is one of the financial advisors for the state's Board of Treasury Investments. Tell us just a little bit about your relationship with the BTI and the State Treasurer's Office.
Sure. So the BTI graciously hired Sterling in 2018 to take over management of the short-term bond pool. So what that means is that we provide the day-to-day investing of that portion of the BTI's funds. So we're out there, trading securities, making sure there's ample cash available in the portfolio, keeping in line with the investment guidelines of the pool. But at the same time, it's a lot more than that. We view ourselves as partners for the state and for the BTI specifically because we provide training to the board, at least usually annually. We've done a handful of webinars to kind of educate the pool's participants and potential participants in the benefits of investing in the short-term bond pool. But we're really kind of in constant communication with the team on the BTI staff just about what's going on in the market, how we're handling the portfolio, anything that they need to know about what's happening in the market, and really just kind of trying to do our best to help them reach their goals and do the best we can for the state.
And so you work very, very closely with staff. Can you explain a little bit about why a state investment board would need to work with a firm like yours? There is a specific relationship there.
Sure. Yeah. It's really about, in my mind, it's about expertise and efficiency. So Sterling, just as an example, has been in business for almost 40 years. So we've been doing this for a really long time. Our staff of fixed income professionals is now 35 members deep. So that's traders, portfolio managers, analysts, and then we have dozens of support staff who handle trade settlement, portfolio accounting, and all sorts of other activities that need to go into the investing activities. And this is all we do is we invest for our clients. So by hiring a professional manager, a client like the BTI and the short-term bond pool gets that expertise of being in the markets every day, and it's something that is, I think, really valuable in terms of trying to add value for investors. At the same time, we talked about the size of our staff. Sterling is really a mid-sized manager. We're not even really a really large manager. But that kind of efficiency that the state gets by hiring a manager, they essentially pay us a small fee every year to manage the funds, and they get access to that full staff, the full expertise of what we're doing as a firm. And it's really something that would be kind of difficult to replicate. When we talk about whether it's the BTI or one of our other clients, like a large corporation, it would be rather costly and expensive to try to have that sort of infrastructure just for investing. So it's great to have that outsourcing option for clients like the BTI. And at the same time, if for any reason any of the managers that the clients have hired aren't doing a good job, sad to say, they can replace us at any time, and it's rather easy to do that. If you had a big staff of your own investment professionals doing that and they weren't doing a very good job, it would be really difficult to try to replace everyone like that. So, we kind of work at the will of the state, and if they're not happy with the job we're doing, it's easy to replace us, and that provides a little bit of flexibility for the state.
You talked a lot about the expertise and how it makes sense for the board to work so closely with a firm like yours. Let's just talk about the BTI in general, though. For people who may not know out there in West Virginia, we're talking about short-term investments of the state versus long-term investments. Can you explain why it's important to have these two separate entities out there and how that all works in the state of West Virginia?
Sure. So there's a couple different pools of money that the BTI manages. They have a couple of money market pools, a government money market pool, and then a regular money market pool, as well as the short-term bond fund, which is the pool of money that Sterling invests. And I think of it as kind of like it's very similar to your personal finances or anyone's personal finances. You have a checking account that you use, on a daily basis to pay bills and all sorts of other expenses. That checking account probably doesn't really earn much interest, if any, but it's always there if you need it. You have instant liquidity, and it's obviously very safe. It's protected by the FDIC. It's in a bank. That's kind of similar to the money market pools that the BTI manages. They're invested in very, very short-term securities, a lot of government securities in there, so very, very safe, very high quality. There's like almost unlimited liquidity in those pools. The participants in the pool can get their money anytime they want. And it's really, the downside of that is it's not really earning all that much, but it's there if you need it. The short-term bond pool is almost more like a kind of like a rainy day fund that an individual investor might have set aside. So you might need it at some point. But you don't need it right away, so you're going to put it in a vehicle maybe that's going to earn you a little bit more interest. So maybe you're willing to take a little bit more risk in that investment than you would in your kind of day-to-day finances. But it's still a very relatively low-risk investment that's going to earn a level of interest, but maybe not as something as risky as the stock market or something more long-term. So for us, that's kind of where we sit within the BTI structure. We manage very high quality assets within the portfolio, and we hope to earn a return that's going to be higher than something in a money market pool or a bank account or something like that. At the same time, the state in other areas probably has more long-term investments in pension funds or something like that. And that's going to be similar to a personal investor's 401k or IRA or a 529 plan for a child who's maybe early in life. And you have plenty of time for those investments to work out, so you're willing to take a little bit more risk in those investments, and those are usually going to be in the stock market or maybe longer-term bonds, something a lot longer than we're managing or the managers that manage the money market pools.
And here in West Virginia, the Investment Management Board may be the vehicle for those longer-term investments for the state. Well, it's very interesting because there are so many facets that go into this, and the BTI works with several advisors and consultants for different layers of protection. You talked a little bit about that. Can you speak a little bit more as to why that's so important to have different firms and consultants involved in this entire process?
Sure. So, again, it's very similar to what a lot of people do in their personal investing. You have a financial advisor you go to who's going to help you learn how to save for college and, for your retirement, manage your day-to-day expenses, any other financial goals you have. The institutional investment consultant does the same sort of job for institutional investors, like the BTI and like our other clients. So their job is to, understand what that client's needs and wants are, understand what their goals are, and to kind of come up with a plan for the pools of money that the client has available to them to reach those goals. So that means they need to understand their risk tolerance, understand their kind of liabilities. So what needs do they need to meet, within the community or within the state, and then to kind of come up with, again, a number of different mandates and investment policies to reach those goals. The investment consultant is also going to do due diligence on the investment managers that are ultimately hired. So they will visit firms like ours at least once a year and kind of kick the tires and go through the books and make sure that the firm is being managed efficiently, that we're complying with all the regulatory requirements that we have, and that most importantly we're keeping their money safe.
Yeah, lots of layers of protection. And I want to go back to this fact that we're talking about the Board of Treasury Investments, which invests state money, state agencies, but there's also another facet. There's the local government piece of the pie. Talk a little bit about that, and what are some of the benefits to those entities out there, the political subdivisions that decide to put money into the Board of Treasury Investments?
Sure. So, I mean, it kind of goes back to that, efficiency and expertise option. Again, for a relatively kind of minimal fee, those agencies are able to invest in, any one of the pools that they choose that kind of meets their needs and their risk tolerance. And hopefully they're going to earn a higher return on their money than they would if it was just sitting in a bank, for instance. Again, there's different levels of risk that comes with each of the pools that they may be investing in, but the idea is to kind of use that money in a slightly more efficient manner to potentially increase their return, while at the same time getting that professional management and expertise and really access to us if they need it.
And you really work with the staff, again, to help them make informed decisions. And you work with the State Treasurer's Office as well. Talk a little bit about how you do that as a company, how you work with the staff to make the best decisions for the program.
Sure. So, first and foremost, as I mentioned, the investment consultant and the staff of the BTI work together to create an investment policy. And the investment policy sets out the goals and expectations for the investment manager who's hired to manage that money. And those goals really are kind of the first level of kind of things that we need to look at when we're talking about how we're going to invest for this particular client. So it's really important to have a good investment policy. We do a lot of communication with the board. They've asked us in the past to kind of give them feedback on how they can improve it. The staff this year actually did a lot of work, actually with the state legislature, to make some changes to the investment policy, to make it a little bit more flexible, but then also to just kind of make sure that it was in line and there weren't any inherent conflicts within the investment policy. So there's a lot of discussions like that. We do provide a quarterly review to the staff where we go through the portfolio. We talk about what happened in the economy and the markets during the quarter, how we reacted to that within the portfolio, and then kind of what we see going forward. So what are the issues out there in the market that we're thinking about that maybe they need to think about, and really kind of act as a sounding board for any questions they may have about what's going on in the markets.
So there are a lot of factors that go into making those portfolio decisions.
Yes.
That you help with as well. Talk a little bit about that.
Sure. So again, we're talking about short-term fixed income investments. So the kind of the big driver of what's going to drive returns within fixed income markets is interest rates, obviously, and what's going to drive interest rates generally is the economy. So the first thing that we talk about when it's time to talk about decision making within portfolios is what's happening in the economy as a whole, both in the U.S. and globally, and then we talk about how that is going to affect broader markets. We want to know what the drivers of growth are going to be, which industries and sectors within the economy are going to be driving that growth. What's that going to do for the inflation outlook? And then kind of importantly is how is the Federal Reserve going to react to that? Because they are going to be driving the bus on short-term interest rates, which is, again, that area that we're very focused on. So the economy, the Fed, and then there's really a set of kind of more market-specific technical factors that we look at, primarily just supply and demand. So in other words, how much issuance is there going to be in the fixed income markets? And then what kind of investors are out there that are going to be looking to purchase those securities? Really there's a lot of different factors that go into it. There's that kind of big macro factor, and then there's the kind of more micro factor, is what's going to be specifically happening in each little segment of the market, whether it's Treasury securities, Treasury supply, T-bills, corporate bonds, asset-backed securities, municipals, whatever it is. And we're going to try to marry those two things together together to figure out exactly where we want to be positioned within the portfolios.
So I think it would be helpful if you could give some maybe examples of how a security enters and leaves a portfolio. I think if you could walk us through that, it would be really interesting to know.
Sure. Yeah. So, I mean, our team is kind of constantly monitoring the markets for opportunities. We've kind of set out our big kind of broad themes for the portfolio based on those things that we were just talking about. But, the individual ideas within the portfolio are kind of being discussed on a day-to-day basis. And there's a couple different ways we come up with ideas to get things in the portfolio. There may be news on a specific company. If we're talking about corporate bonds, there may be news about a specific company that has kind of moved the prices on the bonds of that company. And especially if it's something that we don't already own, it may be an opportunity to buy something cheaper than maybe we did before. In that case, the analyst for whichever company that we're talking about, and our analysts divide up the investable universe by industry. So each analyst has a set of industries that they follow. The analyst is going to do a full kind of breakdown, a deep dive into that specific company, talk about the fundamentals, what are the growth prospects for that company, what is management's kind of attitude towards debt holders. And they're going to do a full write-up in our securities database about their recommendation on the security after they look at the relative value prospects for it too. Is really kind of, we're trying to figure out what is the risk involved in this company, and then what is the potential return. In other words, what sort of spread compression and improvement in the price of the security are we going to get out of it. At that point, again, especially if it's something that we haven't been involved in before, the analyst is going to actually have to present that to me as the portfolio manager, sort of like do a pitch and say, this is why we want to get involved. And, there's definitely some back and forth there, and I'm going to go through and kind of make sure the analyst has thought about all the potential pitfalls to that security. But if we decide it's something we like, we then have to figure out a way to pay for it too. So we'll have to go through the portfolio and decide, okay, well, this is something that maybe doesn't have as much potential return, but has the same amount of risk, and we'll sell that security to buy this new one that we're trying to get into the portfolio. The other side of that is that, when it comes to fixed income, it's a little bit different than markets like equities, where they're all the same. A stock is a stock. When it comes to bonds, we have a lot of different flavors of bonds that we can buy even within a specific company. We can buy the kind of subordinated debt, which is lower in the capital structure, which is riskier. Or we can buy the senior debt, which is kind of at the top of the capital structure. We could also decide if we want to buy something really very short on the yield curve, so it has a couple months to maturity, or we can buy for the short-term bond pool all the way out to 5 years. And that decision is kind of driven by our conviction in the idea. If it's something that we have really high conviction on, that we think has a lot of return potential for, especially compared to the risk that we're taking, we're going to want to take that actually riskier security because it's going to have more room for upside. So we may buy further out the yield curve, we may buy further down in the capital structure. And that process is repeated over and over again. And it's really kind of a constant monitoring of the securities that we have in the portfolio by the analysts and the other portfolio managers to make sure that the portfolio is behaving the way we expect it to, and that we really are kind of maximizing our potential return for the level of risk we're taking.
That's great. Very interesting discussion. Thank you so much for being here. We are going to pause right now for a short break, but when we return, I will continue our conversation with Pete Brown from Sterling Capital. We'll also talk about the current market conditions and the impact that has on investments right now. Stay with us. We'll be right back. Welcome back to Treasury Notes. I'm your host, Gina Joins. Today we are talking about the West Virginia Board of Treasury Investments, the firm that manages the state's investment funds. I'm joined by Pete Brown with Sterling Capital, one of the financial advisors for the board. And Pete, thank you again for being here with us today. We appreciate you taking the time to talk through what Sterling Capital does for the Board of Treasury Investments. And one of the things you do is a lot of recommendations, but a lot of those recommendations to the state really depend on the economy. So I wanted to talk a little bit about the pandemic, inflation. Those are all factors that have impacted our economy lately. What are your thoughts on the current market environment?
Yeah, so obviously the market has changed a lot in the year and a half since the pandemic began.
It's a big question.
Yeah, well, we've come a long way, and there's a lot of reasons for that. You've had a really, truly kind of unprecedented environment where we had an incredibly deep recession, but it was also the kind of the shortest recession ever in history. And the reason for that was you had an immediate and kind of unprecedented response to the pandemic and the recession by the Federal Reserve. So they pumped just an enormous amount of money into the system to try to kind of keep the economy going and prevent any sort of long-term damage from the pandemic. At the same time, you had again an unprecedented amount of fiscal stimulus injected into the economy by Congress. So the impact of those two things was to drive interest rates basically to zero in the front end of the curve, but it also helped the economy rebound rather strongly. So financial markets have kind of fully recovered, and in a lot of cases have now gone past where we were before the pandemic began. Interest rates are still very, very low, kind of across the board. The stock market has done very, very well. And when we look at the different asset classes that we invest in for the state, valuations have gotten relatively tight. In a lot of cases, they're actually the valuations are more aggressive now than they were pre-pandemic. And that's primarily because of those two main things we talked about: the amount of fiscal stimulus, which has boosted the economy, and then monetary stimulus, which has helped drive interest rates low. And part of the reason the Fed did that was to encourage risk-taking within the market. So if investors can't earn anything by sitting in short-term Treasury securities, they're going to look for the next best thing. And that might be corporate bonds or asset-backed securities or municipals or whatever. And by bringing borrowing costs for companies and municipalities and things like that down, that obviously boosts the economy. But it also kind of makes our job harder because now we're staring at a market where valuations are fairly aggressive, interest rates are fairly low, so there's not a lot of room for upside. Now, at the same time, as I mentioned earlier, the economy is really the kind of primary driver behind everything we do. And right now, the economy is really, really strong. Despite the kind of recent uptick in COVID cases due to the Delta variant, economic activity this year is probably still going to grow at somewhere around 6%. So that's supporting the fundamentals of the economy and the securities that we invest in. So company earnings have been really, really strong. Consumer balance sheets look great. Municipal tax receipts are really high, and the kind of financial situation there looks great. So you can kind of point to those valuations and say, well, they're actually, they're fairly justified by the strong fundamentals and then also the strong technicals just from all the demand that we've seen in those asset classes. So for us, you're in kind of this weird space where there's not a lot of upside in a lot of places, but we don't see a ton of downside either. So, we think markets are kind of fairly priced, and there's not a lot of really great opportunities there. So you're in this sort of holding pattern. From the interest rate front, which is, again, a big driver of the returns within the short-term bond pool, we see the Federal Reserve as probably looking to announce a tapering of their asset purchase program here in the next couple months. So pretty much since the pandemic began, they've been buying $120 billion worth of Treasury securities and mortgage-backed securities every month. And then again, that's kind of driving interest rates lower, or one of the factors that's been driving interest rates lower. And we think that as they start to taper that program, probably early next year, that's going to produce a little bit of uplift to interest rates. So right now we see interest rates rising maybe slightly next year. But we think that the economy is going to be strong enough, there's going to be enough tailwinds that valuations for all those kind of non-government asset classes are going to continue to be rather well supported.
And I think that's really my next question is, where do you see inflation and interest rates going? And, will you see any little corrections for what happened over this past year?
Yeah, so as I mentioned, in our view overall, so when you look at interest rates right now, is that they're kind of too low for the fundamentals of the economy, which is really strong right now. So we think that there's a little bit of a risk premium built in because of this recent resurgence of COVID that will probably start to be kind of priced out of the market, hopefully as the Delta variant spike kind of fades, but also as the Fed starts to taper their asset purchase program. And then they start to talk about raising interest rates at some point, in our view, probably in early 2023. Now, you talked about the next 2 years. If I knew exactly what was going to happen over the next 2 years, I'd be set. But our view is that inflation right now it's obviously very, very high right now. The CPI, the recent print was around 5%, which is the highest print that we've seen in decades. But the Fed has insisted that is a transitory rise in inflation, that it's going to start to fade as some of the supply chain disruptions and labor market kind of mismatches that we have fade. And we largely agree with that view, but there comes a risk that maybe the longer this sort of disruption you have in the economy from some of the things that have happened in supply chains persist, the longer that inflation can actually stay above, what I think the Fed is comfortable with, and that it kind of raises the risk that it becomes not transitory and becomes more permanent in terms of raising prices over the long term. And if that happens, obviously that's going to put upward pressure on interest rates because the Fed is going to have to hike rates faster than they're currently anticipating, because it'll have to, rein in those inflationary pressures because they don't want it to get too far out of control.
Yeah, so we have about a minute left, so I just really wanted to ask you, a lot of challenges when working with government funds. Any one challenge you want to specify and point out, or any good things that are happening right now that you can pinpoint?
It's certainly a unique type of client that we deal with governments. There's certainly some kind of legislative things and political things that you have to consider that you don't have to with a corporate client or something like that. But our relationship with the staff at the Board of Treasury Investments is fantastic. They're really a great group to work with, and I think we've got a really great partnership. And I think we hopefully will have that partnership, for years to come.
All right. Well, thank you so much for visiting with us today. We really appreciate it. Very educational and a great discussion. Pete Brown, we thank you for sitting down with us to talk with us about the BTI and Sterling Capital's role in the Board of Treasury Investment strategy. And if you would like to learn more about the West Virginia Board of Treasury Investments, simply log on to wvbti.org. That's all the time we have for now. Thank you so much for joining us today. Remember, you can always get the latest news and information from the West Virginia State Treasurer's Office. Follow us on Facebook, Twitter, or just go to our website. Keeping you informed on the Library Television Network, I'm Gina Joins with the West Virginia State Treasurer's Office.